Hey guys, what's happening? How's everybody doing? Thanks for being here. Appreciate you guys. Still trying to get these new setup. It's pretty sweet though. You can see my gold bars back here. These things are incredible. This influencing job has really worked out well. You just say nice things about their funds. I just talk about how much I like K Yield and K Gold and K Sil, and they send me these gold bars. I just need to figure out how to cash them in now. Hope everyone's having a great Saturday night. So it looks like you guys got the party started without me. Hey, Ben, thanks for being here. Bon, thank you for being here as usual. So you guys are just talking a little bit, and now you're talking about Tuttle. Okay, so oh, yeah. I believe Matthew Tuttle is a sub-advisor on TDAC and TSPY. I don't know if he's going to be on the new ones, but I believe he is. But yeah, he's a sub-advisor. He actually, I guess I'm kind of thinking him and Sai Katara, I don't know what the relationship is. I don't know if he does the options and Sai does the marketing, or they both do a little bit of what. But in any event, whatever they're doing at T-Spy, and this is even before we knew Matthew and Sai and became friends with them, people started noticing, man, this T-Spy does a good job, stays close to the SPY, beats it sometime. Heck yeah. But I think that was probably Matthew's doing, because I think he's big into the uncapped upside. And those are uncapped at night, which is, which is one way to do it. We got BR in the house from the beautiful, beautiful state of Georgia, down there in the big pine trees. Yeah, K Yield, K Gold, K Sil. They've been doing great. I mean, they've been kind of making up for my losses in my Bitcoin related funds. Okay, so speaking of losses in Bitcoin related funds, let's see what is going on, and let's look here. This morning, hey, just to let you guys know, this morning, this monitor right here that we're on right now freaked out, just started going. I don't know what it was. I think it's a bad cable, but I didn't change anything. I just kind of jiggled it. Everything's fine. If it does it again, my apologies. Hopefully it won't. It hasn't done it since this morning. All right, so it looks like Bitcoin is basically straight sideways. I mean, it's up 23 basis points, but if we wanted to zoom back, that's on a 30-minute bar. I mean, looks like we're making a trading range up here between 92 and 89. Anyway, several trading ranges. Anyway, that will work. We'll take it. Let's see. I need more caffeine in my drink. All right, so no one's complained about the audio yet. I guess the audio's all right. Anyway, we have time to work on that stuff later. All right, so I have a couple things we can look at tonight. I have some tabs open of stuff I wanted to talk about. A friend at the station has a new project I want to give the address to, and some other stuff. Oh yeah, but I also thought we're mainly going to do the daily factor tonight, but we can also look at the diversified divas, and then we can also look at the daily factor gold and silver edition from a few days ago. If we wanted to review that one, in case anyone missed that, we can look at that real quick. But let's start with the daily factors. The daily factor is my own proprietary metric based on that. Well, I think it's better than total return. It's certainly better than yield to evaluate these high yield funds on. So let's see. So tonight is Steeler's choice. So you know what I think. I think a fund that only has 5 or 10 or 4, it's just, funds, or 1, it's just about useless. Not that those types of funds, especially the ones with 1, can't do well, like the one based on Google lately has done well. Well, but I mean, or whatever. But it's just solely pretty much based. You're at the disposable of that underlying stock. So I like the ones where they're based on a broader amount you know, at least 20, 25, 30, 35, preferably 50 or 100. Anyway, so here's what we have. Here's our lineup tonight. We'll just start from high yielder. We have Chippy based on microchips yielding 35. We have Soxy yielding only 9, but that one's also based on microchips. It's just a target fund, so it should have more. It should have more NAV. So let's see if it's doing what it should do. Sure enough, it has more NAV. You know, the NAV is 10 instead of 4, but the yield is about a third. The NAV is about a third. You know, you can see it's proportionate. It's proportionate, and it kind of has to be because there's no free money. It's just the way it works. Anyway. Then we have Spin. We don't talk about that much. Doesn't yield enough to get any of us that excited. But I mean, when you compare it with an 8, when you pair it with an 8% NAV return, I mean, boy, if you could have that every quarter, that's really 9%. If you could get 9% every quarter, what is that? The 918. That's 36% a year from NAV, and then an 8% yield on top of that. You have about a 40% total return, but 36 of that in NAV, meaning your NAV would double. You know, the rule of 72 says you double your money every couple of years just on NAV, and you make a little yield. Boy, wouldn't that be great if you could do that every year? Anyway, it's been a really good year for the indexes. It's been a good year. XLEI, that one is based on, what is XLEI? Energy? Yeah, I think it's energy. Oh, gosh, now we have to look. At least I'm sharing the screen. We got a lot of you guys here tonight, 10 of you guys here. Thank you so much for deciding to spend part of your Saturday night with me. I didn't tell anyone I was going to do this. I didn't publish it in Twitter. It's not even being monetized right now. Gosh darn it. Hang on real quick. Or you guys just pretend like, talk amongst yourselves. Talk amongst yourself. If I don't hit this little picky switch, then I don't get any credit for, it's just a picky thing. All right. My apologies. I'm back with you. XLEI is a State Street Energy Select Fund. So yeah, so that's what I figured. So all they do is they just buy the XLE, which is the energy sector fund. They buy that fund invests in the individual energy stocks, but they just buy that ETF and then they sell options on that ETF. Real clean. It looks like they have some 46 and 45 and a half, some 47 and a half sold. It looks like they're tranching them out as the market's going up. They're probably either rolling them or, you know, going up with it. Anyway, great job. Great job. All right, so let's go back to all right, then we have HCal. Now that's one that hasn't and also I chose I chose funds that are diversified. So they had to be diversified and they had to be in like the top 30 or so rankings on the max factor. So these are, you know, or maybe these are out of the top 50. Now, Jackson, I don't know what could you possibly want? Come here, you got to come see me. Want a treat? Come here, you got to make an appearance. Come here, let me see you. I got a treat for you. Jackson. I don't know if you guys can see him. I'm just gonna sprinkle a little bit of dry food out for him. Okay. Anyway, I don't know if you guys could see him right there. Maybe for a second. Okay, back to the show. But yeah, so these are in the top whatever. I just chose the top 20 diversified, so it's probably the top 40 because there's a lot of single stocks. And also, I didn't include ones that are commodities like gold. Even though, you know, so these are based on stocks and diversified. So anyway, but look at this. So we have, I mean, where did HCal come from? I mean, HCal? You got to be kidding me. So what's happening is some of the more quality, just different stocks are rising to the top of the max factor as the market kind of changes. You know, this summer is all about COIW and CONY and, you know, the ones that were based on crypto stuff. Crypto stuff fell out, and now we have this amplified, what's this, cash cows? So these guys sell covered calls on Merck. That's a good company, by the way. FedEx. Owens Corning, fiberglass. Uh, what a solid little company here. I mean, what's the, I'm sorry, I can't see, 10.6. I mean, what's not to like about that one? Anyway, welcome to the list, H Cal. Now I'm not saying it's not necessarily number 5 on the final list. We're going by yield. Then we have Q yield from Global X. This one's here most every week, yielding 11. We have DOGG yielding 8.7. This is kind of a value proposition. HCal, there's more value propositions rising to the top of the max factor for whatever reason. And I haven't changed the formula. I think it's just the way the market's going. Anyway, then we have IDVO, another value play. Then we have IWMI, XYLD from Global X. These both yield about 10 or 11%. Then we have, what is that one? XLI. I can't see worse. Anyway, it's whatever it is. You guys can see it. Then we have Triple QX. This is the Nuveen Dynamic Overwrite Fund. They adjust how far out of the money, and they also adjust how many options they write. The percent of overwrite they write on the fund based on what's going on, and they say they have a dynamic system-based, rules-based approach. They do a good job. Well, we'll see. We're ranking them against a bunch of other funds, but we'll see how well they do. All right, then we have JEPQ. Remember, these aren't the rankings. This is just lined up by yield. You guys know about JEPQ. Then we have XL. What the heck is that? XLFI, probably finance. RSPA. This is equal weight NASDAQ, or no, equal weight SPY. So this is also a defensive play, and it's kind of a little bit concerning that all these defensive plays are getting on the top of this list. I mean, but it may be time to get more defensive. I know with my own, I'm doing my first quarter reallocation right now, and I'm reallocating for defense. Maybe I should consider some RSPA. We can talk about that in a little bit. Anyway, then we have JEPI, SPY. Those are great ones, offense, defense, whatever. Those are steady eddies, been around, have a good record. T-SPY, we were talking about T-SPY. That's the one that Matthew Tuttle, I believe, was a sub-advisor on. Psychotora, I believe, came on our show. I believe that he was on our show the day that came out or something. We helped him premiere that TAP Alpha. It's been a good one. Then we have Devo, another value play. GPIX is, not really a value play. Then SPUT, that's an S&P put right fund. They sell puts on the entire index. So it's similar to something like the Defiance does with their put right fund, except these guys do monthly options. Defiance does daily because Defiance is badass. Or, Defiance is trying to maximize yield. So how do you maximize yield? You do daily. You don't do monthly. Monthly maximizes other boring stuff like return and stuff. All right, guys, everyone doing well here. It looks like everyone's doing well. It's nice to see everyone in the house. Make sure I've seen everyone before. Make sure we don't have any first timers I have to acknowledge. I wanted to say maybe Ben was the first timer, but I think I've seen Ben in here before ling. What's going on? Mago's yield is disappointing. The freaking thing just came out. It can't be. Okay, well, let's talk. Well, we're done with this, but I want to get in the middle of Mago's yield because I have an idea or two on that. Anyway, all right. I'm just making sure there's nothing urgent. It doesn't look like there is. Remember, not financial advice. All right. Back to the show here. So I think we met all our entrants: SPY, T-SPY, Devo, GPIX. Okay. So those are all our entrants. Now we just lined it up by yield. I thought that'd be a good way to look at it. We talk about these all the time. Let's look at these by safety. And we're going to look at these by volatility. We're going to line them up least volatile to most volatile. Look at the least volatile freaking fund in here, XYLD from Global X. These guys sell an at-the-money call option, which has disadvantages. Disadvantages being your upside severely capped. It's capped at the money. So Doesn't mean you can't make money, because you make money from that your upside's priced into the call that you sell. So you still get upside through the call. You can have profit, but you don't get excess upside because you've given up the excess upside. Well, anyway, whatever they're doing, when they sell it at the money, they bring in a big premium. It creates a bigger buffer. It makes a safer investment overall, just mathematically, just on math. The XYLD is the safest out of all of these, which is weird to think. It's not one that none of you guys have heard have it that I've heard of. I've talked to people that have had it before in the past. 5 years ago it was great, and a lot of people had it. I think a lot of people have switched lately to the Neos and to other ones, but I'm not. But this one, just mathematically, the Global X ones, especially lately, I mean, the math have been killing it. Anyway, then we have QILD. I mean, yielding, same thing. Global X yielding 11%. NAV's up 4%. On the quarter, NAV alone's up 4%. Vols is 6. So think about that. The SPY's vol, I mean, the market's vol is about a 12 or 13 on average. So it's about half market vol, right? Anyway, then we have SPUT. These guys sell a put option on the entire market, but they do it in the monthly time frame. This creates a real stable situation. JEPI creates a lot of stability. RSPA creates a lot of stability. It's not only what they're in these, the stability doesn't only come from where they put the option, it also comes from what they're selling options on. You can't just sell options. You have to sell options on some kind of asset. So the underlying assets, and then lots of these are comparatively more stable. For instance, a lot of people, we don't talk about this one often, but JEPI doesn't just blindly, they don't just blindly own the index. They own, out of the S&P 500, they own the 100 to 120 to 130, last time I checked, stocks within the S&P 500 that they think are value oriented. So so they buy the value part of the index, but then they write options on the SPX. So they write options on the entire index, but they own the value portion of it. So it's a more conservative strategy. RSPA just uses a more conservative underline because they use the equal weight SPY instead of it's the same thing, or they use the equal weight SPY. JEPI doesn't use the SPY at all. It is based on the SPY loosely, but they make their own index of 100 stocks. RSPA has 500 stocks, each one 20 basis points, right? Yeah, each one is 0.2%. Anyway, but that makes for stable underlying, more stable. Then we have DOG. That's a more stable idea. This one is a 9 on volatility. And then we have some other ones down here. And then we have SPY Eyes, kind of middle of the pack. And then the rest of them are higher. The most volatile one out of all of them is SOXY and Chippy, and that makes sense because they're based on the fewest amount of stocks. I think there's probably 15, 20 stocks in SOXY and Chippy, where these other ones are based on 100, 200, 500, SPY Eyes based on the entire SPY. So anyway, that's kind of the risk. That's our volatility. Let's look at 1 year total return. You can see the best 1 year total return has been SOXY. Second best has been iDevo. Is iDevo really up 40%? I'm not even thinking that's right. Let's look at the Abbott. Look, the price a year ago was $29, call it. The price now is $40. So it's up 11. Yeah, holy cow. Killing it, iDevo. Devo's also killing it. So if we just look at NAV return, just forget about the dividend. I'm sorry, on 1 year, this includes dividend. This is everything. This is your total investment return for 1 year. So, but anyway, these, T-Spy's had a heck of a year at 18%, GPIX at 17%. Now, these did beat the index, I don't think. I think the index is up. We'll see here in a second. Anyway, so that's 1 year total return. Long-term max factor. Let's look at the long-term max. It's SOXY and IDEVO on the long-term max factor, of course. On the MOX and MOXY, it's all about XYLD. MOX takes into account volatility and other stuff too. On MOX, XYLD wins. The MOXY, it takes into account volatility and other stuff. On MOXY, IDEVO, XYLD wins. On the stable DEX, it's going to be the same as this. It's going to be the lowest volatility. Yeah, XYLD is going to be the most stable. Lowest volatility is the most stable. Sustainability is the final winner. We aren't going to look at that yet. Let's look at the NOB index, the No BS index. I love this index. You can't escape from this index. This index says Chippy, SOXY, Spin, and XLEI. Anyway, all right. So let's see here. Hopefully your favorite fund will win. We're getting ready to unveil your favorite fund. We're talking about the boosted version. I want to talk about all of this stuff. WEPN. I want to talk about that. I also want to compare T-SPY with the SPY for the year. All right. So the max factor is sustainability. All right. The most sustainable of all these right now. Wow. Is XYLD. QYLD second, Spin's third, Chippy's fourth. The max factor is kind of a panicking though. That's why we have the editor's choice. Also, sometimes we'll have an editor's override. But anyway, just on a math basis, I mean, you know, these things are doing pretty well, especially when you factor in the low volatility. These global X1 Spin are doing well. I still think maybe the No BS indicator is a better way to figure it. The No BS has Chippy and SOXY number 1 and number 2. I mean, it's hard to argue with them also. Anyway, all right, we'll look at the No BS in a second, but the actual max factor, and the max factor considers tax consequences and other things. So and actually the max factor is okay. Then the max factor is usually the same as sustainability, but it's not always. All right, so here's the actual max factor. Here's the actual list. Number 1 is actually T-SPY, which I concur with. Well, more so than XYLD and QYLD. T-SPY is yielding nearly 14%. NAV's up nearly 2%. Number 2 is Devo. Devo yields 6.3, NAV's up 3. Number 3 is GPIX, yielding 8, NAV's up, nearly 3. Then we have Triple QX from Nuveen, yielding 7, NAV's up 4. Then we have JetQ yielding 10, NAV's up 3. Then we have SPY. I mean, there's some good ones on here. SPY yielding 11, NAV's up 2. IWMI yielding 13.5, NAV's up 3. Anyway, you guys can see the list from there. I change the metric all the time, but the max factor just figures out the yield and the NAV return without the dividend, just the NAV return by itself, and it looks at the yield and how they interact with each other, but then it figures out the tax consequences, and it balances that out. It balances that out. But then the other night I was just thinking about it, and I was just thinking of an indicator that just was easy to understand and made sense, and that on the No BS indicator, you just multiply the yield times the NAV return. So on this, and I don't know that this indicator isn't a better way to do it. I mean, I don't know that Chippy. I guess the No BS indicator doesn't figure in volatility. I mean, that's the difference. But on the No BS indicator, maybe I should call it the YOLO maybe I call it a YOLO. It's switch it to YOLO. Well, on YOLO, it's all about Chippy, Soxy, Spin, XLEI, and but that's why I call it sustainability. On sustainability, I figure out which ones, especially considering tax consequences, have a better have a better chance of being scalable. Anyway, I think that's a good top five: T-Spy, Devo, GPAX, Triple QX, JetQ. We'll keep going. Number 6, SpyEye. Number 7, IWMI. XLFI at number 8. Number 9 is RSPA. Number 10 is SPUT. Hopefully, some of you guys' favorite funds made it on there. We got who do we got in the house? This is a new one here. WL is risk analysis. The focus on projecting out and paying out only what the fund earns. Paying out more than you earn, simply, it does. And sometimes funds can't help it, but absolutely, but I realize that happens sometimes, but you don't want to. I mean, in my metric, I don't give the fund credit for that because it's not you don't want to reward a bad behavior. And the no BS indicator, especially the no at the end of the day, you want as high of a yield as possible and as high of a NAV as possible. So the no BS just multiplies the yield times multiplied by the NAV. Doesn't factor in anything else. But I do think that the other way to do it. Can you guys hear me now? I'm back, right? I'm back. Anyway, I was going to say I do think that the way the max factor, the short-term max factor, which is the same as sustainability measures, it does give you more quality. I would say T-Spy is way more quality than the ones the no BS indicator was giving. But the no BS or the YOLO indicator, you could also call it just a trend indicator. It's just the way the trends go. I don't know about that one. It's the way the trend's going. It's the ones that are going, that are. But I love how it figures yield in too. I mean, yield times NAV return. How slick is that? Now the problem is if it has a negative NAV return, it's going to be a negative number. But I'm all right with that, right? I think the no BS indicators is a really good way to look at it. Anyway, you could do worse than the top 10 on the no BS indicator. Am I not sharing or something? I'm not sharing. I know it. I'm trying to share. Gosh darn it. Sorry about that. Thank you for whoever. I didn't even read my text, but once I get a text, I know. My bad. All I was saying is this. I'm talking about the no BS indicator. The top 10 on the no BS indicator doesn't factor in doesn't factor in taxes, doesn't factor in volatility, doesn't factor in risk. It just shows you, yield times NAV return. I mean, but anyway, it's a pretty interesting metric though. So Chippy, Soxy, and those are great. I know a lot of you guys love that one. Anyway, thanks for whoever texted me. I bet it was Brad. I can tell by looking at the comments. But I'm looking who's in here. I bet it was Brad. Anyway, thanks, Brad. But yeah, so the top 10 on the no BS indicator, I mean, we have a lot of the same. We have IDEVO, QYLD, But anyway, there's some good steady ones, There's no alties, there's no bloxes, there's no K yields, there's no. Maybe we should talk about the divas now. I mean, I like the thing is, I like the defense. I like what they're doing. But that part of the market hasn't, has not been great lately, and you can see it because the max factor has been, you know, uh, has been the ones that are the more conservative strategies. It's either the only thing that's been rising to the top is conservative. The more conservative strategy has been rising to the top, and anything based on microchips or Google. But anyway, all right. So let's look at some other stuff. So it was a decent day for the Divas the other day. Look at Chippy. I mean, Chippy. Why don't we just all put all our money in Chippy? I mean, my gosh, Chippy's spanking the spy. Okay. Well, anyway, this is my diversified Divas chart. Tesla's going to win the robot wars, huh? All right, this is my diversified Divas chart. Man, it's been there. It's been a disappointing quarter to be in these high, these high risk, high beta funds. I mean, the Divas are the ones in red, and this is since inception, since October 31st, when two of them were incepted, being ULTI and K yield. This is the total performance, NAV and dividends. Well, the good news is K yield from Curve is only down, what is that, 5.28%. That's not bad for a quarter, but I mean, it's the NAV's down more than that, a lot more than that, but that includes pretty good, big dividends. It's still down 5.28%. And it's supposed to be safe. This is supposed to be the one that, the safe one. But it has been the safest of the Divas. Then we have ULTY and blocks, both down about 17, 18%, 17 and a half, 18%. Then we have ULTI down it's at 25%. It's been worse. But anyway, here's the 1 day performances. Look at old QLDY. QLDY up 1.19, and its parent is the Qs, and it's up 1 point. This thing is based on the entire Qs index and systematically beats it on the upside, which most covered call funds do not do. Or covered call funds don't traditionally do that. Not even covered call spreads. Anyway, here's the stocks in Alti and the individual moves the other day. Man, it was a good day for this. I thought we were out of copper. When do we get back? Did Alti get back into? I mean, I guess Alti got back into precious metals. I thought they sold this Southern Copper. Have you guys seen this? Holy cow! Have you guys seen any of this SCCO? I bet Charles has some call options in that one. Man, look at that. Would you take a look at that? Chippy's tempting Chad with a good time. Yeah. 2020 hindsight. Yeah, of course. Forcing Venezuela to buy U.S. made goods is 30 billion. Yeah, good point. I hadn't even really thought about the Venezuela aspect too much. Anyway, all I do is root up every day, wake up and root for Bitcoin to go up. I mean, anyway, I really am, whatever reason, I really am a Bitcoin believer, I guess. I mean, or whatever. I think anyway. All right. Yeah, let's talk about some other stuff. I'm kind of monopolizing it, talking about the Divas. And I need to add Mago to the Divas. Oh, yeah. Speaking of Mago, there was a question about Mago, but Simi came up. What is this? It's a Granite Shares Yield Boost. Oh, Jesus. I'm sorry. I should meant to say, oh, geez. So this has the familiar, this is a chart pattern called the high yield, called the yield max chart pattern down and to the right, or the high yield. You know, you guys don't know what I'm saying, but that the typical high yield, and Granite Shares has it a bunch too. But I'm trying to think. The typical, I guess that one's not too bad. I'm just being a jerk. I'm being a jerk. That's what I was trying to say, something like that. There's a new chart pattern. This chart pattern is called the Yield Max. That's not very nice. All right, come on, Max. That's not very nice. All right. But yeah, Simi, heck yeah. Heck yeah. I don't know anything about it. I like. Sorry about that. I don't know what's going on. My apologies. This time I'll remember to share the screen, though. I did like there's some kind of gesture. I don't know what it is. I picked up the mouse and did something funny I didn't mean to, and it like took me back up. Who knows? Anyway, I'll get it worked out. I'll get it worked out. But yeah, this is this chart pattern is called the Yield Max, called the high yield. The high yield. This is what a high yield growth stock, the high yield growth stock pattern looks like. All right, like I said, that's not very nice. What were you talking about before that? Oh yeah, Simi. Well, okay, but seriously, here's what caused it. In all seriousness, what causes that pattern is an overly high yield. And this one right here, Simi, is sporting a 12% yield, and it's been out for like 2 months. You got to be kidding me. This is going to be gigantic. I mean, it's been out 2 months. So you multiply 12 times 6. And we don't have very good public school in Oklahoma where I grew up, but you guys can probably multiply 12 times 6, and that is going to be a nice return on that thing. But anyway, you can also look at that as it starts in that big of a hole as far as NAV goes every year. So other things being equal, if their assets don't go up by that much, their NAV's going to drop by that much. All right, so let's see what they have here. They have 54% dollars. It looks like they have dollars in T-bills, and then some derivatives. And on the derivatives, I can't really read that far away. It's whatever. They have some options and things. Let's just leave it at that. Anyway, let's talk Mago. Did somebody let's go over here and talk Mago. Sorry about not sharing the chart. Sorry about everything. But I appreciate that. Well, I try to keep my stuff real. I mean, I get as excited about these funds, the free money type funds, as anyone. Like Coney, or I mean, when Coney was going, there's people that bought Coney and then 6 months or a year had their money back. Was it Coney or NVDY or whatever? No, that's awesome when that happens. And you get all your money back, and then it turns into free money. And then there's other ones of these you get in, and they seem like a good idea at the time. You know, like for me, Feet and Fivey. I mean, Feet seemed like a solid idea. I mean, how could you go wrong? You just no. Some of these funds just I think some of these strategies don't work out, and some do. All right. Somebody mentioned something about Mago, and I'm trying to go back here and find it here. What I'm trying to see Max. Oh, that's really cool. So let's talk about that. Chad, my friend Chad here, fellow Texan. I believe, Chad, you're a Texan, right? Anyway, he started a fund. So the MaxPi, what is that? Is that like what broker is that does those pie slices? Is that, I'm trying to think, is that public? or there's anyway, whatever. But yeah, so and I just made some picks. So now it's not so much my picks. I tried to be as mechanical as possible. I tried to look at just the top of the max factor and put whatever was in it. So if we need to rebalance occasionally, let me know, and we can rebalance based on what's going on in the max factor. If we're rebalancing now, we'd probably put in some less risky stuff, um, but in any event. But I'm glad to hear it's up 5.49%. In real life, I'm up about 4%, but the index in the same period of time is up 20%. So I'm like, I'd be fired. I'd be looking for a new job. If I worked on Wall Street, yeah. I don't know how long you make it, but I'm seriously underperforming. Anyway, all right. Well, so somebody was talking about Mago, that it was a weak dividend or something. Let's just go look at that. I just like the concept of Mago. I fall in love with the strategy, with the prospectus. That's what happened in a day. I'm not always right. I'm right about half the time, but that's what happened I fell in love with the prospectus on blocks, and I was right about that one. I really like the prospectus on Alti. Haven't really done that great on that one. But I really like the idea of the lightning spread ones, and I fell in love with the lightning spread prospectus and have been dead right on that one. Those have been great ideas. Well, Mago's another lightning spread one, so I think I'll do fine on this one. So this is just the Mag 7. I just don't know about getting in the Mag 7 with the market at all-time highs, but it looks like what they do is it looks to me like they're doing synthetic cover calls. So, but they aren't, except they aren't cover calls. They're doing synthetic. They own the stock synthetically. In fact, oh gosh, I should have had this. I should have had something prepared on this. I thought I had a spreadsheet with Mago. Well, anyway, they're doing synthetic lightning spreads. So they own the stock synthetically, and then they're selling premium against it, doing something called a lightning spread. So I have high hopes for it because it's the same strategy that QLDY is doing. QLDY is doing a lightning spread, but on the entire index. They aren't messing with the stock. They're just doing it on the entire Qs. Well, the lightning spread strategy gets you more upside, or you get a little bit more upside than the parent, which is just unheard of when you're selling premium. But in a down market, in a big down market, you get a little extra downside also. So not free money. But so QLDY, which is doing this is our experiment in real life on this. QLDY started up. When did QLDY start up? It doesn't matter. Let's look at QLDY. But that's why I like Mago so much, more because of what QLDY is doing and because of the strategy. Like I say, I also fell in love with the idea of the strategy in full disclosure in FEED, which is the Dorsey Wright, and it was technical analysis. I loved the idea of it. So not always right at all, but I think the lightning spread ones have been a pretty good call. So this QLDY just hangs right with the Qs since inception. And it's because it sells the puts instead of selling calls or call spreads. And it's really kind of cheating because it owns stock and it sells an option. I guess that's what a covered call is, because a covered call, you own stock and you sell an option. Okay. But you own stock and you sell a covered call, so you sell it off part of your upside. This, you own stock and you sell options without selling off part of your upside. So it's almost like leverage. And it is kind of like tactical leverage, I call it. But you can see right here, QLDY is just behind the Qs, just fractional amounts. I mean, and you can see when the market went down, QLDY went down just a little bit more. But it also has the ability in an extended up run to go up. It does. It can go up further than the market too. So in a bullish market, this is the first covered call fund that can actually outperform in a bullish market mathematically. Not that other ones haven't because of good trading and other things, but this one on a mathematical basis should be able to have an expectation. In a runaway bull market, it should have an expectation, I think, about performance. That's what I think anyway. That is what I think. So anyway, did any of you guys have any of that TDAC or whatever? I'm just going back through the comments. I saw you guys talking about the TDAC and T-SPY and the boosted. All right, so all right, you guys are talking politics when you're talking about Denmark. I'm not going to talk politics tonight. We have a pro football team there. Well, that would be cool. Swedish Stock Exchange, yeah. Chippy seems great. The fear would be that you might insist on overpaying beyond what they earn, similar to what they did with Alti and with LFGY. Active management should mean they adjust based on premium earned. The Greenland means green. Heck yeah. Bears about to beat the Packers. What a world. And what a world I don't have on football today. H-Town holding it down. Oh, that's right. I should have known. Yeah. M1 Finance. Okay. M1 Finance is where the pie slices comes from. Okay, so this says dynamic rebalancing, 0 commissions, total control. Anyway, that's awesome. I'm up 5%. Like I said, I'm up 4% in real life, which is all right until you consider the market's up more. But oh well. I knew they were my picks. I knew they were my picks, but I think what I did is you said give me some picks, and I did. But then also I wasn't sure on some of them. Of course, I'm going to give you Alti and blocks. I mean, and QLDY, of course. But then I went and I filled in some ones with the max factor, and I forget. I think I did. Then I think I gave you. Then I think basically it is also the same as the top. I think it was basically the top and the max factor too. But the problem was some of them there was 1 or 2 of them that wasn't available. So that's all I was saying. I was just trying to remember what the methodology was. But that's great. Every position's great. So the Bears are still recovering from Rex Grossman derangement syndrome. That's the Bears. Yeah, Rex Grossman. I haven't heard that name it's a blast from the past. Okay, so yeah, Max Pie was. So here's a prime example. I'm sure I wanted K Gold and it wasn't available yet. So I think I went to the max factor and I chose the next highest gold one, which is definitely iGold, which is anyway. But yeah, iGold, Chippy, IWMI, T-SPY, SDTY, blocks, TSLP. Those are some good funds in there. I mean, other than TLTW. No, I'm just joking. I mean, TLTW is kind of boring and stuff, but I actually had it and did well. Had it for about 6 months for a hedge and ended up doing really, really well. Anyway, or I had it last year when the market was dropping in April and March, and then had it all summer and sold it. All right. Yeah, but thanks for reminding us on the lineup because I remember some of them weren't up there. If it was just the ones that I liked the most, I mean, how is Alt? I wonder why Alti wasn't on the list. Maybe I didn't put ULTY on the list because it hasn't been doing that well lately. That's what I'm saying. I do think I did use the max factor to inform my decision. It looks like I used the max factor to inform my decision plus added blocks to it. Because blocks is never blocks in the past 3 or 4 months has been nowhere near the max factor. I just like blocks. I have faith in it, but I mean, we need crypto to go up. It's a bet on crypto. I think blocks is the best way to play crypto, and I have a little bit of BITK too. I like the idea of BITK. If you like T SPY, BITK is the T SPY of crypto. All right. Okay, Ben. They Ben said, I wonder if Defiance will ever do the lightning spread on other indexes. Yes, they filed for it. They filed for some chai. I get there's so many of these I'll look at, but yes, and they absolutely should. And here's the determining factor of this. Determining factor is if they think they can sell it. These guys, they don't care about anything else but selling investments at the end of the day, right? And they do care about total return. In so is the far in as far as the fact that you have to have good total return to sell investments. People, so I mean, it's not like they don't care about that. But at the end of the day, it's about moving AUM, and they just have 32 million in QLDY. That's not a whole lot, and they're also paying twice a week. I mean, what do they have to do to get more AU? 32 million's pretty poor, you know. That's why they haven't come out with more inverses, is because no one buys the inverses. People like the idea of them, and people like the idea of. I think the lightning spread maybe is an option nerd fund. I like it because I saw what they're doing, or before it even came out, I heard about it. Like I've always told you, Jay called and bounced the idea off me, and we were looking at it, whatever. And so I had a ton of time to think about it and back test it. But yeah, it's it's a genius plan. But I mean, no, if this stays at 32 million, they're gonna do what's so. And people always say Alti sucks. They need to fix Alti or whatever. The fastest way to make them fix Alti is just sell it. I mean, there's Alti has $1 billion of assets under management. Yeah, it used to have 2 billion. I mean, granted, but it's still a pretty successful fund. There's plenty of people that are actually happy with it, believe it or not. But these guys, just the AUM is what controls everything. But I've heard Jay express that he's been disappointed on like YQQQ, his inverse fund. Look, it only has 13 million under management. People always say, when are you going to bring out more inverses? More inverses. He goes, you guys don't buy the ones we do have out. Let's see how Salty's done. I was thinking about adding Salty just because I'm super bearish and the market's at all-time highs. Be a good time to buy the dip on Salty. Salty's at an all-time low. But there's probably better ways to do it. I talk about it all the time. It's probably better just to use a buffer fund or a auto callable or something like that. If I'm really that bearish, I could just go get T-Oak, right? Or something like that. All right. Chad's saying, are all the 11% chippy is 12% allocated, or I think the term is target. They're target funds. Oh no, you mean in my pie? Yeah. 12. So one of them came out odd and had to be. One of them got an extra percent. Yeah. There's probably 9 of them, right? And 11 times 9 is 99, and if one is 12, that's 100. So anyway, thanks for doing that, Chad. That's cool. Yeah. Okay. I was just trying to remember it in my memory. Yeah. So iGold is an interesting one. They recently pumped their dividend payout. We may have to buy the fund, really. Well, let's look. I'm pretty happy with my K Gold, and I was pretty happy with my GDXY before that. I mean, 8.5%. So what do you mean they pumped? Maybe it's just because it was the last day of the year. 59 cents. Maybe it's just a 46 cents. 14. Wow, yeah. Hell yeah, they have pumped their payout. Heck yes, I go bye, 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 bye. All right. Monday morning, I'm going all in on margin on iGold. No, seriously, this is a more attractive investment, and I didn't catch this because they were literally paying 13, 14%. Or no, 13 to 14 cents every week, every month, which is great. It's given them it's coming out to 7 or 8% a year. It's great. The past 2 months, which hasn't really shown up in the average yet, but thank you for mentioning that. The past 2 months, they boosted their dividend. And it's not just a one-time thing, or it would have just been 1 month. I think it could have been because they had a good year. I mean, has someone heard that it's, whatever. They boosted their dividend. They've definitely had a good year. They probably had a lot of capital gains towards the end of the year. They had to take because of their long gold positions. That's what people forget about covered calls. They say they're capped. Well, they are capped, but they do have longs in here, and just they're capped, but it doesn't mean they get no upside. And if they're in something like gold, they still get plenty of upside, just not as much as the underlying. But not as much can still be a ton of upside. Okay. Well, anyway, but yeah, if they're going to do this consistently, where they were paying 14 and now pay 59, I mean, 14, that's a 4x difference. Is that a real thing? Is that going to be a steady thing? 1320 Ikimashu. I don't have a good name for you. Iki or Masho. I need to think of something to call you. Bears just won. The Bears. Does anyone have any thoughts on M1 versus Fidelity baskets? I know Fidelity incurs a cost, but factoring that in, which one has the edge? That's a good question. I do not know. Okay, so Chad's confirming they're both mostly based on the max factor. So the max factor is doing well. TSYX Max? What is TSYX? Where do you guys come up with all these? Well, how can they bring these out so fast? They need to stop bringing them out. We have enough of these. I'm just joking. Oh, yeah, the T-Spy. That's the lifted one. Okay. Oh, gosh. Yeah. I mean, so much stuff out there to get. I mean, I'm doing my rebalance. I just don't need more risk. If I got some, I want to get Mago. I really want to get Mago. If I'm going to put on more risk, it's going to be Mago or some kind of lightning spread. This is the year of the lightning spread. I want to have uncapped upside. If I would have had a lightning, if you would have had, look at this, or well, let's look at this. Okay, well, forget about this. We're swerving over to this lane. We're swerving over the lane of T-Spy. Let's look at T-Spy versus SPY. We're talking outperformance. Usually you cannot outperform a parent. The parent's almost always going to outperform. That just because there's no free money. If you could sell options and outperform the parent, every pension fund in the world would just sell options all the time. And a lot of pension funds do sell options, but and also the market's efficient. If something like that was that way, everyone would sell premium, and then it would bring the premium down, and the market would fix that situation also. But it doesn't mean over short periods of time, and it doesn't mean you can't outperform, or it darn sure doesn't mean what these things can give you. And what really, really matters, especially in early retirement, is risk-adjusted performance, because is a buffer on, they can give you maybe they can't usually outperform, but they can maybe give you better risk-adjusted performance. which means they can outperform sometimes. Maybe they underperform sometimes, and maybe over the course of time they give you better risk adjusted performance. Anyway, let's look at T SPY versus SPY for the past year. Look at, would you take a look at that? I mean, T SPY 1604, SPY 18.20. That's amazing. T SPY's NAV went from 24.95 to 25.46. I mean, people that are NAV purists, NAV truthers, wouldn't even like that, because they'd say, look, my NAV is up. What is that? That's 46 plus 5. That's up 51 cents. My NAV's up. You mean you're telling me my NAV's up 51 cents and the SPY was up, had an 18% up year? But yeah, that's the way it works, because you also got a 14% dividend, meaning you had a 16% total return. Like I always say, if you were looking for yield, if you needed some money and you wanted exposure to the SPY, this could be a good one. All right, let's look at. I want to compare it to Big Y. Big Y is beating it, but Big Y hasn't been around as long. Big Y came out. Okay, anyway, whatever. All right, so what were we talking about? I know I swerved into the T SPY lane. Oh yeah, lightning spread. My point was, it's going to be very rare, and that's what I made the max factor for. We look at these all the time, and it's very rare for the child to beat the parent over any course of time, especially consistently. But I think that's not going to be a thing anymore with the lightning spread funds. Now you're still going to have to pick the asset that's going up. But when they have single stock lightning spread funds, can you imagine a single stock lightning spread fund in Mister's going up, or Coinbase or whatever? I mean, it's going to be, it's going to be incredible. Anyway, I don't have any TSYX, but thanks for bringing it. But yeah, the max factor, I'm glad the max factor has been doing well. I feel pretty good about it, but I don't know what to do with this no BS indicator. I just like I need to, like I say, I think I'm going to repackage no BS indicator or YOLO indicator. That's more of what it is, because it's just like, give me numbers, everything else be damned. So I think that's what I'm going to do. It's just a YOLO indicator, but I mean, YOLO, you only live once, right? Anyway, but yeah, the max factor itself, where it factors in risk and stuff, I think is a better overall indicators. But we'll keep looking at the no BS indicator or the YOLO indicator. Yeah, TDAX, Tuttle Capital, TAP Alpha. Yeah, QLDY has dropped a little bit, but I'm not selling. Yeah, I'm not even really looking at I'm not really trading it. I'm just, but anyway, so I don't, but I hate that it's dropped, Ben is saying that would be a great combo with the 3. Oh yeah, with the TAP Alpha, the regular ones combined with the boosted ones. The inverse could be called the minimum factor. Yeah. All right. Defiance's single stock leverage income funds have really bad AUM for the most part. Yeah, I don't really leverage single stock. Yeah, geez. That's like MST and stuff. Yeah. Leveraged income single stock. So yeah, MST, and there's other. Yeah, I don't have time for single stocks. You can get, I mean, you can still get plenty of risk using these ones that are these index ones. I mean, here's okay. Let's go. I'm going to swerve back over into another lane here. T SPY, it is a good fund. It's had a heck of a year. I'm not doubting that. Let's compare it to XDTE over the past year. T-SPY is beating XDTE. And a lot of people are talking about how badass XDTE is. And I mean, XDTE is badass, but man, T-SPY is spanking it. Good job, T-SPY. But remember, T-SPY is not beating the SPY. It's about a point behind the SPY. And so, and it's not, and all these other ones aren't beating T-SPY. So it means all these other ones aren't beating the SPY. I mean, that's what I'm trying. It's just rare to beat the parent. And these are good ones. SPY Eyes is steady and as good as it gets. These guys are pros. They don't pay too much. There's really no such, the paying too much is a little bit of a misnomer. They have to pay whatever the fund earns, whatever money it brings in, but it's kind of a mess. I need to do a video about that. They can, but what they can control is they can choose a strategy that doesn't overpay. Some strategies pay too much, but they just, whatever the strategy makes is whatever it makes at the end of the year, and that's what you get, regardless if there was an operating profit or a loss. But some strategies don't output as much yield, and like SPY Eye, for instance, they have a strategy that doesn't output as much yield. So it seems that, you know, it makes them have a easier chance at NAV appreciation. Anyway, but SPY Eye for the year, let's look at their NAV. Their NAV went from 51.10 to 52.94. You know, a NAV purist wouldn't even really like that too much either, just because that's also not great. But like I say, if you're looking for, the key is if you're looking for a yield. If you're looking for some cash in retirement and you already have bonds and you want it, whatever, T-SPY and SPY Eye could work. Not financial advice. Oklahoma math for the win. Heck yeah. Good old Oklahoma math. The suboptimal factor. That's a good one. Yeah. Yeah, Charles. The mid factor. There you go. Oh, gosh. Oh, how about the bad factor? You know, yeah. I don't expect the Qs to make another 20% either in 2026. So I'm looking for my rebalance. I'm looking for buffer funds, maybe even a little inverse. I don't know, but buffer for sure. Buffer and buffer funds, just buffer funds, I guess. Buffer funds will be good. I already have some inverses. I already have like 15% inverse. Market goes down, that will do fine. And then my buffer funds will fill in the rest, hopefully. I just don't want gold to go down. What I don't want to happen is I don't want the market to go down and gold to go down. You think I just don't want gold and silver to have a correction, because they're the only thing that's holding my portfolio up. If gold and silver goes down, oh my gosh, my brother-in-law is going to fire me, and you know. Chad said we're see a rotation coming on, rotating to not tech. Charles is saying next time put someone. We got Brad here. Brad's saying, yeah, I should look into it. I think that's what I'm doing. Okay, I'll go look at your Discord conversation. I really think that's what I'm leaning towards. I think I would do half and half, and then so I did this auto zoom feature, but because I don't have the pinch to zoom anymore. Anyway, whatever. DGen 4 plays is saying, what do we think about barrier funds? I think it might be a good year for some. Also, just midterm, isn't there seasonal that midterms are bad years? Since I just rebalance every quarter, I mean, maybe the pullback will happen this quarter, and then maybe by the second quarter, by April, just like last year, I'll be putting risk back on, into a pullback. So I mean, but I just heard that midterm years are usually not great years for the market. So, and I wouldn't be surprised after the last couple of years we have a pullback, or wonder if we get a big pullback into the first quarter or something, kind of like what happened last year or something. That I could see that. Anyway, uh, the problem with barrier funds, they aren't for growth. Correct. They're correct, but they do pay a yield. And so if you need it, it's just like any of these. None of these are for growth. They do pay a yield, and because of the barrier, hopefully they'll be more. They'll be, they'll have less downside volatility. Is the idea than they would than dumping all your money into a non-barrier fund. But it all depends. It all depends if you need a yield or not. I mean, CAIE it has CIS. It's a barrier fund. It's auto callable. It's an auto callable bond, but the auto callable bond has a barrier option embedded in it. There's tons of good info out there on the internet about CIE. They're kind of complicated. Go to our Discord and read. Marcus knows a lot about them and talks about them a bunch in Discord. CIE is a barrier. There's also CAEIQ. It's based on NASDAQ. Why the merger between Tuttle and Tap Alpha seems to. Oh, I didn't know if it's a merger. Lots of times you'll have a fund and then they'll have another fund that will do this happens all the time. Lots of times you'll have these shops and maybe the shop will be more about, you'll have a wealth management shop, but they'll be more about salesmen, and they'll be great. And they have a lot of good relationships and they bring money, and stuff, but they have guys that are option traders in Chicago and New York actually doing the option trades for them. A lot of people outsource the actual option trading. I think Tuttle's an actual option guy. He lives in Connecticut. He works on Wall Street. But so I think it's not uncommon for a fund to have one fund and then to use another fund to do their trading. The guys at YieldMax do trading for a ton of funds. And Tuttle does trading for Tap Alpha. Tuttle actually does some trading with Rex. Tuttle's actually a sub-advisor at Rex. So no, it's not as random as you would think. I mean, I don't think. Yeah, Tuttle for options and Tap Alpha for index. That's right. Sai's a great guy, but he's a stock guy. And Sai's also the guy that's going on and selling the investment. He's the one going on all the shows and stuff. But in doing the stock, but they have lots of people will outsource. Options is kind of a specialty. I mean, it is a specialty. So lots of times they'll outsource the option part of it. XPay versus T-SPY. Yeah. You mean up here, XPay versus T-SPY? Yeah, let's look at that. Let's look at it. I mean, look at that, XPay and T-SPY. I mean, XPay wins by just a little bit. I mean, and XPay pays a higher yield. It looks like XPay had a higher total return and it paid a higher yield. But those are both good. Hard to go wrong. They're T-SPY. What about, I get all these, I was thinking, okay, SPY T. Now, what about T-SPY versus SPY T? Just for fun. The only reason I'm doing it is because SPY T pays 20%. Oh, and T-SPY pays, okay. So T-SPY pays a lower yield and has better total return, which I kind of expect. SPY T pays 20%. T-SPY pays about 14. But anyway, great look there for T-SPY. Great look there, T-SPY. Factor D's. Hey, Ethan. Ethan's here. I think platinum will get hot. All right, what are we saying here? You think platinum will get hot? I just want gold and silver to stay up. Curve coming out platinum. Yeah, probably if they're coming out the ETFs based on it, it is. Maybe I need to look at my rebalance and getting some platinum. The rebalance should have already been done like 10 days ago. I keep talking about it. You remember I talked about that one rebalance for like a month and a half last summer, and I finally did it. But I was waiting on the market. I actually did pretty decent on that rebalance. You know, maybe not adding to the blocks position, but I did good on the cells. Platinum, then palladium. Who knows what else? Yeah. All right. The barrier funds will grow depending on what type of market we're in. Yeah. As Tesla. Now what? Tesla versus Nordic Gold. Tesla is Nordic Gold. Okay. Why does it do that sometimes? Yeah, okay. This is a good question, Will. No, I don't. And let me try to get the screen back. All right, Will say, Max, you have any questions on buffer auto callables? I don't, but I'm going to get you the right way to look at it. One thing, get in our Discord, and if you just have a few questions, get in our Discord and talk to Marcus, talk to the guys in Discord. But what is... But there's a woman I've been watching named Diamond Nest Egg on YouTube. She's not an option gal, but she knows options. But she's a bond girl. She's into bonds. She's T-bills, T-bonds, governments, corporates. Anyway, I'm kind of liking this. I'm kind of liking her content. Anyway, even though she is not an option gal, she did a really good job, a detailed job. If you really want to understand about auto callables and how they really work, she did a really nice job. I'm going to get you I've had some live streams where I've got on a roll, and I think I've done a great job explaining them. But I'm not an expert in them. But yeah, this right here is what you need to know. This explains how the barrier works. See this line down here at 60? That's where the barrier is. 100 is where the market is when you do the option. You know, they do one option every week. They do tranches of these, but she just follows one tranche through. But when you fall through the barrier, the option no longer pays a yield. And so you miss your coupon. Now the principal's guaranteed. At the end of the 5 years, you're guaranteed to get your principal back. I mean, it's guaranteed by the other bank unless JP Morgan or the counterparty goes out of business. But that's what you're playing. That's what you're playing for. The auto callable, and the auto callable means something too. It means that the other side can call. It means it can be called early, and depending on what interest rates are doing, sometimes the bonds will be exercised early. You don't worry about any of that because these guys at the ETF are managing this portfolio of auto callables. But in real life, if you're doing an auto callable in real life, you could do an auto callable, start getting a coupon every month, and then all of a sudden you get your bond called away early, and then you have to go find another auto callable to sell. Well, they do all this stuff for you. It's auto callables, from what I understand, are income investments that banks and funds have been doing for years. Retail, this is the true democratization of finance. Here's my only caution about this. I think some people say, okay, so you mean it's guaranteed. The only bad thing that can happen is if the market drops, they stop paying the yield down here. And that's just on one bond. The thing is you have 52 other bonds. Not all 52 bonds will go under the barrier at once, but wonder if half of them were under the barrier, you could lose half your yield. And a lot of people are saying, I'm fine with that. But the problem is, if that happens, as the market drops, as the NAV of these auto callables will also drop, but because it's closer to the barrier. But then as the market goes up, the NAV will go back up. And these things I think they can grow a little bit. But a barrier fund is, I'm trying to think. It's capped upside. I mean, because you're trading something for the big barrier. So I'll think of a better way to describe it, but I bet it's like virtually capped upside. But anyway, go watch this person right here. I don't know her name. She does a great job. Well, anyway, so since I started watching her, I've started getting into bonds. She talks about bond ladders. My friend Tom, who's in Discord, and also my friend from real life. I made friends from him on the internet, but we're also friends in real life. He's been telling me forever, just do a bond ladder. It makes a lot of sense, and I've known about bond ladders for years. I've never done one, but I've known people that have had bond ladders. But anyway, she has some good content on bonds. Bonds are other legit ways to get a yield in retirement. I don't think bonds are as cool as covered calls, and I think I like how covered call strategies can make more money when the market sells off because premiums go higher, and I like a lot of the elements of option strategies. The only problem with option strategies is the capped upside, but now that we have the lightning spreads out, that's no longer a thing. So it's a great time to be an option bro. Okay, there I am. Okay, now I can see you guys again. I think I'm still zoomed in. I think I have levels of zoom. Oh yeah, I have 2 levels of zoom. Okay. All right, I'm getting more used to this. I'll get all these technical things worked out. I'll be rocking and rolling. I used to always tell myself, if I had a good computer again, if I'm my Mac back, I can make some good content. Because my AI is, even on my laptop, my AI is super slow. Well, this processor chews up anything I throw at it. So I'm going to get back into the data side of it. For a while I was doing a lot of white papers and a lot of spreadsheet type stuff, but more than spreadsheet studies and stuff like that. I'm gonna get more. I really like that kind of stuff. I'll get some original content coming back out. I haven't had any original content on in forever. You're saying if Howard comes out with the glass fund, you'd buy it. Yeah, Howard does a nice job. But yeah, check her out. She does a nice job. I mean, there's you might like the rest of her. I've been a regular watcher of her channel. She talks about annuities. She talks about any way you can think of to cash flow in retirement. She talks about from covered calls to bonds. Hey, here's a new one she talked about. I said about USHI. Hang on. I hope I don't do it. What the heck is USHI? USHI is a 6.65% cash yield with government treasuries at 3.88. Heck yeah, I like the sound that looks of that. Let's just see, where does it come from? Let's options probably, or maybe they just sell more risky bonds. I'm just trying to do a little too long don't read on it. Clarity control. Well, who knows? Go check this one out yourself. Um, oh, but yeah, she loves bonds. She loves bonds in the same kind of way that I like options, I think. Treasuries and stuff. Anyway, all right. But yeah, that's where I would go. That I think there's other places too, but go watch her auto. Her explanation of auto callable, I think, is excellent. Brad is saying he thinks over the long term, a holder of a barrier fund will trade close to par, and the money will be made from the yield from the ups and downs of the market. So yeah, so that's kind of our expectations for a barrier fund. I'm trying to think. So what's CAIE paying as far as yield goes? Let's go look at. I want to pull up CAIE. All right, CAIE as far as yield is paying 7 over about 2/3 of a year, so about 12 to 15, something like that. It's not like the NAV can't go up. The NAV started at 25 and is at 27, you know, and it's paid a $2 dividend along the way. NAV's up 2, it's paid a $2 dividend. I mean, it has nearly $1 billion under management. I mean, this is what makes funds want to bring out more funds like it. You want more auto callables, buy the auto callables, people start coming out with auto callables, and they have. But yeah, people don't like Alti. They just need to sell it, and they'll close it down. But there's still lots of people that like it. The $1 billion funds a lot of money. Anyway, I think that and also I do think the changes they're doing will help. So we'll see. I'm hopeful for good old ULTY. It was kind of first of a breed, but there's some other ones out there that are probably just as good if not better, but they weren't there a year ago. Anyway, yeah. So CAIE. So we have an investment here that's NAV is. So what I'm wondering is if it's going to pay 12-15%, why not just get T-SPY, or why not just get because of the barrier, though, I think is I'm thinking my own question. T-SPY doesn't have that huge barrier on it. But CAIE is spanking T-SPY. Look at that. Heck yes. Look at that. Yeah, $2 dividend and NAV's up 2. That's even Steven. I mean, NAV went from 25 to 27. You got $2 of your money back in the form of, you haven't really got it back, but you've got it on paper in wealth, and then which might be better for taxes, but then you've got $2 of it back in cash, which depending on, like I always say, so these can really be good tools if you need cash. If you don't need cash, I mean, you definitely rather just have the SPY. Anyway, so can CAIE okay, so SPY beat T-SPY. So let's check SPY against CAIE. CAIE is impressive any way you look at it. I should just get in and not worry about it. I can always rebalance again, and if I'm wrong, if I'm wrong, I'll rebalance again in 3 months, whatever. go, Goldfinger. The stair step down will much less with CAIE and the suite. Oh yeah, no, I know it. I was thinking it through. That yeah, I was thinking it through. You know, I'm trying to think. So let's think about that. So if all the money was in one bond, which it isn't, but just if all the money is in one bond, market drops 40%, CAIE should be flat, or on the barrier basis. The barrier is flat. The market drops another 10%, so the market drops 50%. CAIE should be down 10%. On NAV, but it's also not paying a dividend at that point. So, and I think that would make the NAV even a little less valuable. I'm telling you, it's not, I just don't believe that its NAV is only going to be down 10% if it drops 50, if the NAV of the, if the NAV of the parent only drops 50% for, I think it's going to drop more than that, because I'm saying if the market's down 40%, I think CAIE will be down. I think it'll be down 10% right there, at least if not 15%, because it's getting close to the barrier getting busted. When the barrier gets busted, the yield isn't due anymore. And, you know, and who knows how long it's going to stay under the barrier. Anyway, so, but yeah, so you have it. What my point is, so you have an instrument that should have about half the downside volatility of the market, but pay a yield. So, but I was saying that's not a whole lot different than some of the instruments that are out there now, like QYLD, for instance, which is on the top of the max factor lately. QYLD is super safe on the downside anyway, has about half the downside of the market. It lags like crazy on the upside. You know, here's QYLD lagging on the upside. Look at CAIE just spanking QYLD. But QYLD is steady. Look, it barely drops when the market drops. I mean, it's lots of good choices out there. Let's look at, so when the market did drop, though, anyway, I think these funds, I think the auto callables, you'll have something that'll have about half or maybe a little less than that of the downside of the market, but pay you a yield and have, you know, maybe 3/4 or so of the upside of the market. All right. Let's see what else we had to talk about. Did everyone catch my daily factor show the other night? I had a gold and silver show. Let's just redo it really quick. Let's just see who won. We can look at that. Did I do an OBS? I didn't do an OBS. We'll just look at the max factor. K Gold's number 1, K Sil's number 2, Silvo, Gold I. This iGold's an interesting fund, but it doesn't rank very high in the max factor. Anyway, whatever. All right, so what else did I show you guys? We already looked at the divas a little bit. That's tonight's daily factor. That's the YOLO list right there, though. Chippy Soxy. Anyway. Here's the real list. Is that it, or is that it? Gosh darn it. Oh, no, I was doing it wrong the other. Gosh darn it. All right, here's the actual real list. This is backwards. This was actually in last. T-Spy was actually in last place. Well, and I could kind of see why. XYLD has the same yield as T-Spy, and the NAV returns like 3 times as much. Just the math of it is definitely better. Well, anyway, I can kind of see that. Okay, so my bad on that. All right. What are the max factors XYLD, which I don't understand. It's because it's super stable. The stability, the max factors are panicking. But I mean, this has been a good investment lately. I mean, then QYLD, Spin, Chippy, Dog, HCal. Anyway, all right, that's the daily factor. Okay, so what else? So I had some other stuff I wanted to show. That's why I have these tabs open. Oh yeah, and we have a friend of the channel, and he's in the comments right now. His name is Mr. Ethan. Where are you, Ethan? Here, he just left me a comment. Anyway, Ethan's a friend of mine, a friend of the channel. Ethan is doing his own thing as far as he has an Instagram, which I just followed last night. He has social media accounts all over the place. This is his main property. I'm going to share this with you guys. Go check it out if you'd like. Let me share this. And if any of, I know some of you guys also have YouTube channels. Heck, doesn't Dividend Degenerate, he did a breakdown of Mago. I should have watched it. Or I need to do my own. I can't even keep up. But if any of you guys, I remember Retire on Dividends was always real nice when I first got in the business to share whenever I was on, to let me share links or whatever. If anyone here has a channel and they want to share their link, anyone besides Ethan, there's Ethan right there. Put it there. But anyway, that's Ethan's server that he's getting started. He's using a different service. He's using something called WAP. WAP, I guess I should say like that. Anyway, I signed up. I have a free account over there. I signed up today. I was looking at it. I really haven't had much of a chance to look at it today. I've been just working on the computer. But anyway, it's on an open tab. As long as it's on open tab, it means I'm working on it. So, all right. So what else do we have on open tabs? New max factor, the M1 portfolio for investing. Really, and please go check this Diamond Nest Egg. Yeah, that's the name of her channel, Diamond Nest Egg. I don't know why. I mean, maybe you guys will hate it, but for some reason, I'm getting into these, these guaranteed yields. She's just into these high yields, but she's into the ones that are more guaranteed on the government side. Anyway, just go watch her and let me know what you think. A lot of good communities, a lot of good YouTube creators out there. This right here, this should be what retired watching every week. Let's turn it on really quick. If you guys don't watch this every week, it's the first thing you should watch. Watch it before you watch anyone else. Watch it before you watch me. Watch it before you do anything other than maybe go to church, or take care of your family. But other than that, this is your next priority on the weekend. This guy right here, he's a Georgia. He lives in Athens, I believe. He doesn't really sound like he's from Georgia, but his name's Chris. It's an Italian last name, Chavacco, something. Anyway, great guy, great channel, and he is a chart master. Not just like, oh, here's a breakout. No, he's like looking at long-term patterns and and ratios of just go watch this. This is as good as it gets as far as technical type information goes. Every weekend, and I haven't seen it yet this weekend. In fact, I'm going to watch it as soon as I leave here. I'm just going to rewind it to the first of that and watch it when I leave here. But anyway, yeah, there's Ethan. I think he's happy that I shared his link. Go check out his his property. Anyway, or Ethan's in, I mean, also Ethan's in Discord. Go talk to him in Discord. I still can't get used to my new setup where the camera is. And I mean, do you like how I blurred the background? I think that's cool. That's an option on Mac, not on the camera. But I've always seen cameras that did that, and I always thought that looked cool. The blurred. I mean, I just thought that was a cool touch. Anyway, all right, Chad, what are you going to talk about here? Just going to be dangling the carrot for the market. Yeah, Terraforming. Now, this is some stuff I want to talk about. All right, let's talk about these tariffs. I'm going to go back down here. Okay. How about K-Gold? Yeah, how about K-Gold? And I think you may be a first-time commenter, Philip. If you are, I appreciate you being here. Yeah, how about K-Gold? I love K-Gold. I don't know. This guy right here is talking about gold and stuff. But like I say, he's talking about longer-term macro trends and stuff, but some really good stuff. So anyway, but yes, as far as I think, I like K-Gold. I'm a believer in it. I'm trying to think how much of my portfolio I have in it, like 5 or 6% in K-Gold, and I have 4 or 5% in K-Silv, and it's been doing really well. Been doing really well. But yeah, oh yeah, I was going to get this link for you. So go watch this. I'm giving you guys homework. It's late. Get out of here. Go to bed. That's fine. Go watch this video. And I'll watch this video. Then we can talk about tomorrow. What's tomorrow? Tomorrow's Sunday. Okay, yeah. And I'm going to have some new content out tomorrow, come hell or high water. I don't know what my deal is. I haven't had any new content out in forever. I just haven't felt like making any. I just go through phases. Back in October, I was just on a roll. I'd make videos and they'd be huge hits, 4,000 or 5,000 views. I had 2 or 3, 4 videos there that have just killed it, but I'm like a band that hasn't had a hit in a while. And I don't know if we're going to have another hit. I don't know. Oh no. Well, anyway, hopefully we can help Ethan. Ethan's going to be able to help himself, but hopefully Ethan's properties are a big hit. Like I say, I think it's Dividend Degenerate also has a YouTube channel. If you guys like to share his link, we can share that too. What else? Okay, required watching for the weekend. Seriously, you got to watch this, but there's one other guy to watch also every weekend. This guy right here, his name's Peter Resnicek, and his moniker on the internet is Shadow Trader. Nice guy, good, great content, and has a great little weekend show. I want to make sure you guys watch that as well. And I'm going to also, I haven't watched that either. So I'm going to watch Peter, and the other one, really more excited by the other one. Peter's good too. Peter's an option bro too. He'll have some he'll get in here and say, look, and he's also into market profile, which is these funny charts that show you the volume at each price. But they have some interesting nuances that you can learn a lot about. Look at that set. This is a cool set that he has. Boy, would I love to have something like this. He only has 100,000 people. He's not that big, but his entire wall is a screen. How the hell does he do that? Do you guys think that's virtual? Yeah, it's probably virtual, isn't it? It's not even there. But look, it shows him in his room right here. But it's probably all virtual. He's probably just standing in a room in a 1-bedroom apartment. No, he used to have one of those Microsoft tablet things that did stuff. So whatever he has, that probably is a real screen. That one may not actually be virtual. Anyway, but go watch this guy as well. I forgot if I shared I forgot if I actually shared it here, but I mean, I could right now put the Max Factor on a backdrop behind me, just put a cheesy graphic back there. Rod does it. I mean, Rod's the king of the cheesy graphic behind it. I'm just joking. Hey, thank you, Chad. I appreciate that. Look at that, Chad, with the donation, man. That I think that tripled the freaking money that the station's made this month. I haven't had any advertising sales yet. Seriously, I bet I haven't made $10 for the month yet. But anyway, now I've doubled my production for the month. I appreciate it. Thank you very much. Thank you very much. Chad just gave a super chat there, and I sure appreciate it. All right, trying to make sure I haven't missed anything else, but hopefully you guys already watched these things. But no, I've thought about trying to make this. I have a room here. I'm a bachelor. I can do whatever I want. I've thought about. I kind of like how Mike Coe's room is painted gray. That Dorian, he has the TV behind him. I have a big TV. Well, you guys see my big TV. I've thought about hanging the TV behind me and maybe putting my logo on the TV, just like Mike Coe, he says, Yo Maxwell, and painting the wall black or something, and then getting some lamps and some more plants and some more books and some stuff behind me. Getting rid of this printer. I just have this printer, but anyway, in investing in the studio. But that what I thought about the TV is huge. It's like 60-inch. I thought I could also turn around and use the TV to illustrate, to do like whiteboard presentations, like, so anyway. But yeah, I've thought about investing in the studio, but the first investment in the studio was a desktop. We've talked about it for a long time. You guys have been giving me advice. And the desktop, the dual monitors and the desktop, just absolutely, well, the dual monitors is absolutely necessary. We got the dual monitors going. Now, dual monitors isn't enough. We need dual monitors and a blazing fast desktop, which we have. So now the next couple of things on my list are a video game chair, a better chair, maybe some better decor, and maybe even paint the wall. I'm thinking maybe like a dark, maybe even black. I kind of like dark backgrounds, or I think maybe like a gray or something. You guys have any opinion on that? Anyway, look at Ben. Ben in here with the $5 super chat. Well, I certainly appreciate you, Ben. You guys are, I didn't say super Chad. I said super chat. Oh, yeah. Okay, I thought you were thinking I was, yeah. I mean, yeah, okay, yeah, super chat. Hey, yeah, heck yeah. Heck yeah, I like these super chats. I need to figure out, of course I like them, but I need to start bringing out some new content, giving you guys some more reasons to watch. Like last night, I didn't even have a Daily Factor show on. I was going to have one on, and I just ended up, I don't know. So anyway, sorry about that. Sorry about that. Yeah, do we all know who each other are? Who's Ben? Okay, well, we know who Ben is because it's in his name. But yeah, Ben, are you a first-timer, Ben? Or your name, or you aren't a first-timer, maybe? I'm trying to think. You're at least a first-time commenter, but we have another first-timer. Well, I don't know, Ben. I think you've been around for a while, but we had a new guy for sure. For sure, we have one of you guys I'm looking is new. Well, anyway. But yeah, I need to keep investing in the channel, and there's all kinds of good stuff that will happen if I keep investing in the channel. Really, I don't know if you guys remember the first investment because for a while my idea was I didn't do anything for the channel, and I just wanted the channel to pay for itself. But then I decided to start trying to invest a little. So I maxed out, and this was in September, and it's when I started doing better. I maxed out my subscriptions on 3 different AIs. So I quit running out of AI room and stuff. And that really helped also. Actually did that in October. But that's when I was making some banger videos. So, okay, yeah, you've been here. Okay, okay, I'm sorry, Ben. So you're on the night crew. Okay, so there's one guy that's totally new. Okay, so Phil, that you're new, right? If you haven't been here before. Anyway, hey, what you want to talk about K yield? We can definitely talk about K yield. Let's go look at K yield. Phil's a new guy. He's putting K yield in here. So we have a chart here for K yield. We actually perform, followed this performance since the first day of November. And it's actually down 5.28%. Now the other day on a 1-day basis, it was actually up big, up 1.5. We could see what it has in it right now. These are the stocks that are in K yield. Over on the right, that's how far the stock was up or down the other day. They have AppLovin, which is up 5%. Good job. Broadcom was up big. Of course, Broadcom's is a semiconductor, and you could see what Chippy and Soxy been doing. Those things have just been Broadcom, AMD. Those things have just been killing it. Anyway, Bitminer immersion was down a little bit, but then we have BWX Technologies. They have Coinbase. They have some money markets. They have a little Shift4 payments. What's this Freshworks? I'm not familiar with that one. Sounds like an Austin company. We have a store here called Fresh Plus. That's a grocery store that people like to go to. A little boutique grocery store that's awesome. But in any event, this is Freshworks. That's different. GDX. Then they have Galaxy Digital, Hims and Hers, Robinhood. They have some risky funds in here. I mean, it doesn't get much riskier than Robinhood and Hims and Hers. And AppLovin. But Howard has a way of putting some more stable ones in here and doing a little bit better, a little bit less risky than something like Alti or Blocks, because he has some crazy funds in here. But then he'll mix in stuff like Intel and I guess, what are the more stable ones in here? There's not a lot of, I guess, GDX, gold miners. Not a lot of stable ones in here. It's a miracle Howard gets as much stability out of this fund as he does. It's actually a miracle he's only down 5%. Everything in here is a hot mess, really. I mean, my gosh. Anyway, but yeah, there's your K yield right there. Alti's the only thing that's more riskier. Alti has all the really risky stocks in it. It looks like it's messed up as far as the graphic is. So we'll skip Alti though. But yeah, I knew we had a totally new one in there. But Ben, you're right. You're in here all the time. I should know that. I should know that. And I do know that. I remember you from other nights. All right, Ben saying, speaking of AI, you've been wondering if there's some way to get an AI alert to movements for the sake of day trading. Yeah, scanner. I'm sure there is. Yeah, that's right, Chad. You would probably have to do something like that. Man, this is the most profitable live stream I've had in forever. I always also mention this. If you like to support the station, you can also always go to paypal.me/Max Convexity. The advantage to PayPal is I get it right away. If you pay it, and YouTube doesn't take some of it. On a super chat, YouTube takes some of it. But I appreciate it any way it comes. But that's why sometimes I put this up there as well. But then also, and I usually do that at the end of the show. And also, I always also remind people not financial advice. Consult a professional advisor. I certainly don't want anyone to think I'm trying to sell advice, which is not what I'm trying to do. And of course, I'm not licensed. But if you don't like to do super chats, PayPal always works as well. All right. So what else I would talk about? Like I say, I'll leave the tabs open. I wanted to make sure I meant to mention Ethan Sight last night, or actually it was 2 nights ago. Supposed to mention it 2 nights ago. I forgot to. Told him I'd mention it last night, of course, and then didn't have a show last night. Anyway, so I'm gonna mention it today. You guys have the link there if you want to go to it. Let's go see if crypto's moving. Really about the only thing that used to in the old days, you couldn't look at anything. Nowadays, you can at least look at crypto because it trades all weekend long. So let's see Bitcoin on Coinbase, and it is up. We're trading up. Look at that, up a third of a point. I mean, it's, you can still tell it's in congestion in a bigger scheme of things. It's just noise, probably just kind of going back and forth. But oh well. Journey of 1,000 miles starts at the single step. Prices are consolidating here. You can tell this 87 level was key down here, and I mean there's a lot of trading, two-way trading went on down there. Anyway, the bulls took back that area. There's also two-way trading going on at 91. The bulls are trying to take back that area. Hopefully someday we'll take back the area at 93. We could even look at a longer term time frame. The 30-minute chart, tells us kind of what's going on past couple of months. But look here on a little bit longer term time frame, it looks like the two-way trading is 97. That's the next kind of node of two-way trading. Then there's more. Then there's some up at 115 and some up 104. But it looks like 94, 95 is where bulls need to establish to blast off for the next place. After that, if we're unable and we fail to take that out, there's trading at 87, which we've been at lately. And then there's kind of a void and two-way trading down here at 67. Hopefully, some people say we need to go to 70 or 75 to find buyers or whatever. And on a chart basis, I can see why people are saying that, because there's a gap right here on the chart. There's probably, so we'll see. We'll see if that happens or not. I'd sure like us to go back to all-time highs. It sure was bad when we lost this trend line. That's a major long trend line that it could actually go back probably further than that. We lost that trend line and didn't recover right away, and lost the 200 period moving average. We're just in a bear market. There's no way to sugarcoat that. That's just not that chart's been killing me. But anyway, hopefully we're at a bottom. Hopefully we bottomed out down here. We turned around and we'll go back to all-time highs. By the summer, we'll be trading at 150. By next, that'd be wonderful. That's what I'm pulling for. Okay, so all right, what's W live stream mean? You guys are just talking amongst yourself. I would ask ChatGPT or Grok. Oh yeah, making indicators. I'll tell you what I want to make is. Do you guys see this indicator right here? Indicators, and there's 100 million of them. And see, you can even. This is a store. You can even download them. This is how many downloads they have. This one's, and so you can upload them too. You can sell them on this. Anyway, these are called. You have to know something called PineScript, I think, to do this. Well, I don't know PineScript, but Grok and Gemini and Claude know PineScript. So I've heard if you have an idea for an indicator, you can go in here to indicators, and you can go in here to. You could build your own indicator, and you could even they have trending top, editor's pick, and or you can have AI build it. It can be based on technicals or fundamentals. So you can have ones based on. I only want to look at companies that have a certain price earnings growth ratio over the past 5 years and have a certain debt to equity ratio. You can look at fundamental type stuff, but then you can also say, and I want something that's over the 200-day, but under the 50-day. And I know that's like a scanner, but and then you can turn it into you can also turn it into an indicator somehow too. But anyway, this can do all of that. And I have an idea for a project, and I just keep putting it off. But I have an indicator that I want to build. But in any event, we need the money printer to turn on. Yeah. All right. So Ben, I'm just assuming my EA building ended with MT4. Oh, your EA building, your technical analysis. I mean, I know MT4 is charting packages, right? So are you building like automated scripts or something, algorithms? So do you like that ICT concepts? Is that right? Or are you laughing? It was just one of the suggestions in there. I mean, it doesn't mean. Yeah, no, the max factor is not going to be max because I really don't believe in indicators. But no, what I wanted to turn into an indicator was my pros versus Joes. That ratio we look at all the time, and we look at it every morning. I thought it'd be interesting to turn that into an indicator. But anyway, so do you guys not like? Do you guys not like? Chad, are you talking? You don't like ICT? Are you talking bad about ICT? Where did you even see ICT? Was it because of it came up here? Yeah, just because it's here. My suggestions. Okay, my suggestions are the ones that are more commonly used, but I mean, I also look at Bollinger Bands. I mean, I look at a bunch of these. Yeah, I think ICT concepts is solid. Smart money concepts. This Lux algo is interesting. Do you guys know about this Lux ICT concept, Lux algo? There's one Lux algo that predicts the future. It doesn't really work though. Spoiler alert. Guess what? It doesn't really work. Liquidity. I can't remember market profile with TP. I can't remember which one it is, but there's one that'll show you a future path. Predictive ranges. Smart money concepts. Squeeze index. Super trend question. Well, anyway, I think Lux algo has some. Yeah, there it is. The Echo forecast for Lux algo. And that's a good name for it. Now they call it the Echo forecast. That actually is a good name. So here's the prediction. Here's the future right there. You guys owe me if this comes true. Here's the future Bitcoin price projection. This is all the way through, what was that? All the way through April, through the end of March, the end of February. So it looks like we're going to pull back to about 84. Then we're going to rally up here to about 98 something. And then sell off violently. I could see that. That would be a good place for us to sell off if we can't take back this 98, 99 level right here. Take back 100. I mean, it's whatever. Yeah, that's going to be so that'd be that, I could see that part of it coming true. Yeah, but so there it is. There's the Echo forecast. But yeah, spoiler alert is it doesn't work. Yeah, I'm going to make expert advisors auto trader. Good to know. Okay, you came from Forex World. That's awesome. Okay, So you don't like ICT because, I mean, I get that or whatever. And I don't even know who he is. I don't even know who he is. I know that uh, that indicator, I like what it shows. I like looking at fair value gaps. And that's part of the ICT philosophy, I think. So anyway, I think that indicator shows the fair value gaps pretty well. So anyway, um, you're a Fade the Smart Money guy. I hear you, guy. I hear you. All right, guys. So I'm going to get out of here and let you guys go. I appreciate you all being here. I think it's been a good show tonight. Recap what we talked about. Who won the show? I've already forgot. Did XYLD really win? Oh yeah, there was controversy because I put it on because I had the Max Factor backwards, right? Yeah, I had it on T Spy. That's actually backwards. So, and it's not that T Spy is a bad fund, but when you look at the metrics and then you compare it to other funds, there's other funds with the same metrics that have less volatility, that are more stable. So that's why they went ahead this month or whatever. Anyway, but so to reiterate, the winners are, and I mean, XYLD, QYLD, Spin, Chippy, DOGG, HCAL, XLEI, XLII, JEPI, and SOXY. That's the top 10. But I'm going to overrule and go with the editor's choice is going to be the YOLO. Because how can you go against Chippy? 35% yield and a 4% NAV return. I mean, I just don't see why the Max Factor is such a panicking. I mean, the difference is, though, I mean, I could see just mathematically, QLD is about 3 times as safe as Chippy. When you factor in I guess I can see the Max Factor picks for safety and long term. I guess I could see that. Anyway, but Chippy's been incredible. The editor's choice is definitely going to be Chippy. Chippy for the editor's choice. Okay, so yeah, I think it was a good show. Thanks, guys, for being here. And I will talk to you guys later. All right, see you.